It's a very good morning, guys. How are you, everyone? I'm here again with another video. And if you can see my heading over there, it's written ICT Trading Concept Market Analysis just before the CPI news. And this box, it's in red color. It's not an invitation to take entry. So I'm not a financial advisor. So I'm not giving you a signal to take entry. And obviously, you shouldn't take entry depending on your analysis as well before the CPI news. It will hurt you. Always it will hurt you. So just don't take risk. Let the price do what it would like to do, and then you will find a very good setup after the CPI news. You will find very clean setup, and you can be profitable after CPI news. You will just take some meat from the bone. So just wait to the CPI news. Let it happen. Whatever it would like to do on the chart, but you can anticipate the price. I'm doing the same thing here, that what it could be, what is the possible way, but it's not confirmation that it will do that, because nobody can predict CPI news. I'm thinking that market has just traded the breaker over there. This is the daily chart of dollar index. So market has traded the breaker, go higher there. This is your market structure shift. If you see, it has cleaned this liquidity. So after cleaning this liquidity, it has nicely shifted the market structure, and this could be your breakaway gap, the lower daily fair value gap. Currently it has just traded the consequent encroachment of the daily fair value gap. As market doesn't want to come lower, that's why it has just traded the consequent encroachment. It didn't even close below the consequent encroachment of the daily fair value gap. So I'm thinking that market will go to this volume balance today, and also if it is more energetic, then it will go to this weekly I fair value gap. This is the weekly, from weekly chart I got this I fair value gap. So let's see what happens. And when I'm bullish in dollar index, then obviously I'm bearish in uh, other NASDAQ and even S&P. One more thing, it can happen. What it can happen is it can actually break this low. If it is break this low or this gap, if it closed totally this gap, closed its body below this daily fair value gap, then I'll think that market will go lower before going higher. But this is low possibility for me, low probability for me. I'm strongly thinking that market will go higher, and today it will tap to this weekly fair value gap, I fair value gap. So let's see what happens. Let's go to the NASDAQ. So in NASDAQ chart, you see this is the weekly fair value gap. Market has traded the weekly fair value gap. See the bodies, guys. It has just closed inside the weekly fair value gap. We did go outside of the fair value gap, but we see the story by the bodies. So bodies are showing that, oh, we don't want to go higher, we just want to go lower. And then this last week it has traded the weekly fair value gap again and started to melt down, and I marked this as a sell side liquidity, and this is the consequent encroachment of the monthly week discount. Let me show you that. You see this week, this is the consequent encroachment level. I marked it. Guys, please mark as the way I marked it over here. Mark it to your chart. Otherwise, if you just watch the video, it won't be helpful for you. You can't learn. You have to do this on your chart, and then you will start that you have see the things before it happens to your trading history. So this level I have just marked from the this is the new day opening gap. Yes, from yesterday. It's not important actually right now, but all these three levels, you see this sell side liquidity, this consequent encroachment, also this sell side liquidity, and here is the monthly fair value gap high, monthly fair value gap low, and the consequent encroachment. There is the weekly fair value gap, and this is the volume balance. You see, this is the volume balance. So all of this place, I'm expecting that using CPI news, market will trade over here, at least to the volume balance today. It will clean this low. I know it's a big run, but CPI actually do this type of things. It gives us a very, very, very big run. Let's go to the daily chart. So here is the daily chart. From daily chart, if you see this gap from this high to this high, this is a gap, daily fair value gap, and this is the consequent encroachment of the daily fair value gap. Market went to the daily fair value gap, consequent encroachment, then break down, and this is the consequent encroachment of the daily I fair value gap. That means this fair value gap from this candle low to this candle high. This is the uh, daily fair value gap, I fair value gap, inversion fair value gap, and this is the consequent encroachment. And the day before yesterday, it you see it has actually traded, not the day before yesterday, like 2 days ago. Last it has traded the consequent encroachment and then started to go higher. It went to some level over here. If you go to the lower time frame, you will see uh, how long it traded, and then it breaks down yesterday again. And now I'm thinking that it will break down, it will clear this sell side liquidity, and I will watch this monthly week discount level, also the sell side liquidity over here, and finally this sell side liquidity over here. This is all depending on CPI news. It can happen that it didn't want to go down and it started to go higher. In that case, this high, also this volume balance, this high could be your target. Let's see what happens to the CPI news. It's very important to watch it, when it will release. It will release, actually it will release today 8:30 a.m. The New York local time. So let's see what happens, and go to the hourly chart directly. I have to say something over here. So I have just marked all of these places. You see, uh, it's written over there. So what is it level? Just pause the video and watch it slowly so that you will be sure which level all of this is. Market has traded this hourly fair value gap breakdown, traded back to the daily fair value gap, I fair value gap. This is the daily I fair value gap, and also the 15-minute blue lines. They are the 15-minute gaps. If you watch my yesterday's videos, you will know how beautifully I actually framework some the to trade to this depending on this gap. So this is the gap. So market has traded over there, came back down, and lastly it has traded this hourly I fair value gap. You see this candle, it has just traded over there and it started to go lower now. So my strong opinion is it will go lower. Maybe it can go higher one more time to this gap at the first stage of the CPI news. It can go higher first, and then it will break down. And if it would like to go lower, I have already told you where it could go. There is a lot of level which is very, very sensitive. This is the weekly discount CE we have already seen, and there is, I have actually marked all the imbalance over there. You see, this is the last hourly fair value gap imbalance, and this is the volume balance from the daily chart or weekly chart. You just check it again. So I'm thinking that it will go lower, and so quickly let's go to the 15-minute chart. In 15-minute chart, it's the same. I have just marked this in imbalance above the market, so that is the only imbalance market didn't tap. And right now it's just trading over here to this 15-minute fair value gap. There is another 15-minute fair value gap lower this 15-minute fair value gap. And so that's all, I think, guys. When CPI will start, I think market can go to this any of this level, either 15-minute fair value gap or this 15-minute fair value gap or daily fair value gap, inversion fair value gap. It can go until then, until this gap or this gap, then trade break started to break lower. How do you actually framework your trade? When if I'm right, market just go up for manipulation and then started to go lower, I will watch every level, the daily fair value gap, consequent encroachment, this 15-minute fair value gap, and this is sell side. This would be your target. And then this volume imbalance, I will watch every time market will pass this all of this place. For example, if I see, let me just show you here. If I see market just go first over there and then started to break lower, it has just come here. When it will come over here, I will, like, it's already past 15 minutes past after the CPI news. I will expect that market will give me this 15-minute fair value gap will work as an inversion fair value gap. So I will watch if market can go over there. Then if I get a very nice market structure shift to the low, I will take an entry, and my target will be this 15-minute fair value gap, something like here. If it goes something like here and then break lower, this 15-minute fair value gap, and it just go to the consequent encroachment or the lower part of this 15-minute fair value gap, give me a very nice market structure shift. My target will be this sell side liquidity, and this is how actually I will framework my trade. So you know, that's why this all of this level is very important for me. I will see how it traded all of these levels, because this is all imbalance, and also the liquidity. mm, See the liquidity over there, so it is very important. Let's go to the even S&P chart first. In even S&P chart, you see that market has actually trading inside this daily fair value gap. It has traded the weekly fair value gap, same like the NASDAQ, and it is already below the consequent encroachment of the daily fair value gap. So I'm thinking that it will go lower, and this is the monthly fair value gap. I've been talking about this fair value gap so far for like nearly three weeks. Yeah, 3 weeks something. So I'm thinking that market will go lower and break this low. It will trade somewhere here. Here is, you see the daily fair value gap, also the volume balance. It can trade towards there, and it will trade over there. In my opinion, if I get everything is good, then today could be the last day for even S&P and NASDAQ for the lower run, and then it will start to go higher. I'm thinking if it has reached over here to this gap and this volume balance, then it could be the last day for even S&P and the NASDAQ for the short trade. Then it will start to go higher, and toward this buy side liquidity. It's actually the equal high from the monthly chart. So that's all, guys. I'm thinking that it will help you to understand how to framework the trade before the session. And as it is CPI, so I won't take any risk before the CPI news. I will let the news do whatever it would like to do, and after when market will come down, then I will try to find a setup which will be more obvious, and I'll try to take entry. So talk to you later. See you guys. Bye bye.